Here's the problem. You love watching Meet Kevin videos and you learn so much from them, and he puts out a lot of videos daily. You saw that he did a great video, but it's 1 to 2 hours long and you just don't have the time to watch it. But I have a solution. I watched it for you and summarized the main highlights from the interview that he recently did with Ross Gerber so that you can get the best information in a short period of time and fit it into your busy life. Some of the things that you will learn in this video are his thoughts on Bitcoin and Tesla, why he doesn't like Vlad and Robinhood, why options aren't profitable except for one way, why he has sold a huge chunk of Tesla and is still trimming his position, his advice to people just starting out, the 3 most embarrassing stocks he's buying right now, and much more. The content discussed in this video is a summary from an interview and should not be used as financial advice. This video is for entertainment purposes only. Make sure to consult with a professional before making any money decisions. I did my best to cover the main points of this interview, but I couldn't cover every single thing that was discussed. If you want to get the full details, watch the full interview. It was actually a really great interview. Who is Ross Gerber? He is the co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management. His firm manages $1.8 billion. They have 7,500 clients, and they do about $50 to $60 million a month of inflow. During the interview, Ross said that more people are now focused on the stock market than he's seen in 25 years, mainly because of the pandemic. Before the pandemic, no one cared. He could walk into a room and say what he does, and people would ignore him. Now, if he said that, everyone would be asking him for stock advice. This is a great reminder that I took away from this interview. You don't get rich with paper hands. Kevin started off the interview asking Ross about his thoughts about Bitcoin and Tesla. Ross is bullish on Bitcoin and Tesla. He's bullish on Tesla because they're in the energy and transportation market, which are both important markets. He believes that Bitcoin is a hedge against the government. He believes his clients should diversify into digital assets like Bitcoin. He does not believe the outcome for Bitcoin is $0. Could it go to 10K? For sure. Right now, Tesla is bigger than it should be in his portfolio, he says. He's trying to get it between 5 to 10% of his portfolio because he wants to manage money prudently. It's too volatile because he is managing money for other people. Tesla and Bitcoin are high-risk investment, he says. He says that 1 to 2% for most people is good for Bitcoin. He started buying Bitcoin back when it was $250. He said if you're a young, aggressive investor and you have 10% in Tesla and 5% in Bitcoin, that would be an aggressive allocation for someone who likes risk and wants to make real money. There's a misconception when investments pay off that it was somehow easy. People don't realize how painful it is to make money in Bitcoin, the stock market, or real estate. You can make money from Tesla and Bitcoin, he says, in the next 5 to 10 years, but it's going to be painful. But that's how you make money. Then Kevin wanted to ask him about Robinhood, and Ross really had some strong opinions about Vlad and Robinhood. To quote what Ross said about Robinhood, Robinhood should not have the incentive to convince their clients to gamble. Robinhood makes most of their money from order flows. Last year was $700 million in order flows, up from $60 million. $400 million was just in spreads in options transactions. Traditionally, the spreads for options are much bigger than a stock. For example, if he buys a stock from an institutional perspective, the spread is 1 cent. But when he buys an option, it could be 40 cents. Robinhood says it's commission-free trading, but there's nothing free. They're just charging you more. Payment from order flow is part of the industry. Everyone does it. It's whether or not you're relying on it as your only source of income. If that is your only source of income, then your incentives are messed up. Robinhood doesn't pass it on to you if there is a discount for your order. From the congressional hearings, Kevin thought 40 to 50% of Robinhood's revenue comes from order flows, but Ross believes it's 90%. Vlad cannot help but lie, Ross believes. He can't answer a question without lying. At the congressional hearings, Vlad was asked how much his clients had made, and he said he couldn't answer that. He said he had $30 billion in assets, but doesn't know how much is profit for his clients. Ross said that he can turn on his computer and see exactly how much his clients are making. Ross doesn't like Robinhood because they make investing feel like gambling instead of focusing on long-term investing. Next, they got into talking about options. Ross says that options are not profitable for the guy trading. They're profitable for the other guy. Ross said he has traded options for 25 plus years. He trades them minimally now. Certain option trades are easy money, and those are the ones he focuses on, like selling calls on highly volatile stocks like Tesla. Selling calls is a wonderful strategy if used correctly and works probably 80% of the time, he says. Ross also says he buys leaps. Buying a leap, he says, makes the cost of ownership lower if he doesn't want to buy Tesla at $800 a share, for example. When he buys leaps, he's able to use it as leverage to get a higher rate of return. One reason options are profitable is because of the time decay. There is a premium in the price based on how long the option is. So the longer your option is, the more that option costs. Depending on how much that stock goes up and down, that interest rate changes. So when you're the guy selling the options to the customer, the more volatile the stock, the more profit he makes if it doesn't work. Ross said that people don't understand you're paying for the time value and paying for the spread, and this is even before you make money. So for options, you have to be really right because time is not your friend, and you're paying a premium for that time, and you're paying for a spread that is big. But if you're on the other side of these option trades, it's like printing money. So if you think you're trading Robinhood options and you're beating anybody, you're beating yourself. Kevin said there's a disconnect when people think of stocks and options. They're not necessarily thinking options are more risky, though at some point there is an expiration and there isn't for stocks. Ross laughed and said that's like a dude who rolls up to a party with a bunch of heroin, and he says it's like smoking weed. If you buy stocks, you buy equity. You don't have to worry about it again. When buying an option, it's the right to buy the stock. There's a lot of risk. You might be right about the idea, but wrong about the time. It could expire worthless only to see the stock go through the roof soon after. He continued his point about trying to time it correctly, and he referenced Tesla. He says that no one will know when a stock will take off. If he knew that day Tesla was going to take off, he would have gotten like $20 million in options. When Tesla goes up 15 times in the 5th year of owning it, it makes up for the 4 years before that where it didn't go anywhere. People call him a genius that 5th year, but the 4 years before that, people call him an idiot. If you're enjoying this video so far, hit the like button and be sure to subscribe. With options, people overthink it and think these 3 months are going to be spectacular, and they're going to bet and buy the time and make 5x. So instead of making 10% a year on average in the stock market, I can make 40 to 50% if I am right. That's why people like to trade options, Ross said. You can make 10x if you're right, but you can make 0 if you're wrong. Ross had a couple great quotes about options that I wanted to highlight. The first one is, equities, you almost can't go wrong. Options, you almost can't go right. Options are like real estate. You can lose 100%. He talks more about Robinhood, and he says again that he doesn't like Robinhood because they sell the dream of get rich quick. You can try to get rich quick, and he knows some people who have, but he knows a lot more people who have lost everything that way. Ross said that Robinhood is like a casino. When you run a casino, you look at everyone and you laugh. The house wins 20% on blackjack, but the game is only supposed to win 2%. So why is it that people lose 10 times more than they're supposed to? Behavioral psychology is the reason. It's hard to walk away from the table whether you're up or you're down. It's the same reason people can't win in the stock market on Robinhood. Even if you win a couple trades, you're going to follow up with some losers because you can't leave the table. Casinos entice you to keep gambling. That's why they give you free drinks. Time is their friend. They know the longer you play, the more you'll lose. They love the guy that loses $1,000 and then is determined to get it back. If Robinhood said to use Robinhood to gamble on the stock market, Ross wouldn't care. But they're pretending to help you, and that's why he doesn't like Robinhood. He did talk about some casino stocks, so I do want to mention that in the summary. He has a big stake in MGM. He's been in it since he started investing. Now MGM has online gambling, and he believes that online gambling is very lucrative. And he also mentioned that Penn Gaming is good too. Kevin asked if people were just starting out, how should people start? And he wanted to get Ross's opinion on that. And Ross said that he understands that there are people who want to invest in themselves, and then there are people that want help. If you like learning and reading about companies and do the work, then buy the stock. He often recommends to dollar cost average for Bitcoin, stocks, ETFs. He recommends buying a blue chip company that you use every day, whether it's Apple, Google, Amazon, Airbnb, for example. He says maybe you should diversify into 10 to 20 stocks and then buy some ETFs that give you exposure into a whole new sector. As long as you keep adding on a monthly basis and you stop trying to time the market, you will be very successful as an investor. He recommends getting help, but of course he's biased. Not everyone wants to pay 1% and he gets it. There's nothing wrong with being an individual investor. Buy stocks and hold them for life. They go back to talking about Bitcoin in this point in the interview, and Ross said that no government will ever like Bitcoin because Bitcoin takes away power from the Federal Reserve. The Federal Reserve has power because it prints money. He says that if you took over a country, what are the first things that you do? Well, first you enslave the people, and then you make your own money, and then you make people use your own money. If the government can't seize his Bitcoin, then he has the power. Government can take away all your assets except your Bitcoin. Ross again talked about Tesla, and he mentioned that his personal account is still heavily invested in Tesla. And then to the shock of Kevin, he said that he sold a chunk of his Tesla. And this is the moment that Ross told Kevin that he sold a chunk of his Tesla. And I wanted to get a screenshot to show you the look on Kevin's face. When he was talking about selling Tesla, he said that, quote, "You're twice as dumb if you make a lot of money and then lose it back." He said, there's dumb moves like if you buy a stock and then it goes down. You think you're an idiot. Then there's twice as dumb, and then you can't live with yourself. He made so much on Tesla that he had to sell. He still has more Tesla in his portfolio than his clients' portfolios and more than he recommends. So he's still trimming and looking at others in the EV sector. Despite being jokingly called a paper-handed trader by Kevin, Ross said that he doesn't think that he can make 10x on Tesla again, and that's why he sold. So he's looking at other sectors like battery technology. The reason he's investing in battery technology is because all EV cars cannot succeed without batteries. So he's buying ETFs, individual stocks of battery suppliers, and materials. He talks about a EV company that he's invested in called Archimoto. They make three-wheeled EVs for retirement communities, golf courses, delivery vehicles. He believes they're great for deliveries because it's cheaper and smaller. It's a great vehicle for tourism rentals, and it's also a great vehicle if you live in a city that's hard to find parking. Now, I had no idea what an Arcimoto vehicle looked like, so I went to the website, and I thought they looked pretty cool. So you can go check out the website for yourself if you want to see what it looks like, but I also took a screenshot just to give you an idea. Kevin wanted to get Ross's opinion on Lucid because Kevin thought that when Ross mentioned that he was looking to invest in other EV companies, that he would invest in Lucid. But Ross said he doesn't think Lucid can 10x. He does think that Lucid is twice as expensive as it should be right now. If it was $15, he'd buy. But he wasn't given the opportunity to buy at $15 like BlackRock, and he was a little bit upset. Kevin asked if he had to go all in between Robinhood at a $100 billion valuation or Lucid at a $50 billion valuation, which one would he choose? And Ross easily chose Lucid to the surprise of Kevin. Kevin really thought he would just go for Robinhood, but we know Ross's opinion about Robinhood. And he's been inside a Lucid car. He says it feels very luxurious inside and has a real nice interior. And he believes that they'll be successful in delivering cars and that he would own Lucid long term for sure. He doesn't believe Apple will buy Lucid because Tim Cook never buys anything like Tesla or Netflix when he had the opportunity to before. It would be so easy for Apple to buy Tesla, but Apple needs to be in mass market vehicles, Ross believes, and Lucid won't be for the masses due to their price. Peloton came up during the interview, and Ross mentioned that he sold all his Peloton. He doesn't believe that people will ride indoor bikes forever. They had their best year ever last year because of the pandemic. People couldn't go out. But he believes that once the weather turns warmer, that people won't want to be inside on their bikes all the time. They want to be out. They want to be with other people. They want to be with their friends. They want to be flirting. So that's why he sold all of his Peloton. He mentioned a company called FRX. That's the stock ticker symbol. And he says they're building a bike for the masses. And he can buy this at a 2 times revenue valuation, while Peloton is trading at a 30 times revenue valuation. He likes Peloton bikes and classes, but what are you paying for that business? He thought $48 billion for a bike company was plenty, so he sold it all. He would rather invest in a $2 billion company that does the same thing, but is built for the masses. He also likes the management behind FRX, and he also believes that it's a great product. He mentioned certain stocks over the period of the interview, so I'm just going to summarize them here for you. He said that he has owned Apple his whole career, Nvidia also, Activision. He doesn't think about selling them. There are 12 companies that he said that cross over between the Dow and the NASDAQ that are large cap growth companies that you have to own because they control the world. The ones that he mentioned were Amazon, Google, Nvidia, Disney, Microsoft, Apple, Home Depot. Unfortunately, he didn't mention the rest, so we didn't get the full 12, but those were the ones that he did mention. He talked about the 3 stocks that he's buying right now, and he called them the most embarrassing companies he's ever bought. But he bought these 3 as a hedge to offset his tech risk. So the first one that he mentioned was John Deere. And the reason for John Deere was that he said that demand for farmers has increased because the Chinese has to buy food from the USA to offset the trade wars. So farmers need to buy new farm equipment, need to upgrade, need to buy more. So that's why he said he's buying John Deere. He also mentioned JP Morgan, and he also mentioned U-Haul. U-Haul, he says it's because everyone's moving now, and they've never seen so many people rent U-Haul trucks now. We're getting to the end of the summary, so I hope that if you have enjoyed this summary, to give a big like to this video and also subscribe so that you'll get notified when I put out future video. So I'm just going to sum up basically some of the final thoughts that he had in this interview. Again, it was a really great interview. If you enjoyed this summary, I do recommend to go back and watch the full 2.5-hour interview that they did. It was full of details. It was funny. It was great. And I certainly hope that Kevin will have Ross back again in the future. So Ross said that the secret to making money in the stock market is to invest in things people aren't talking about. And then when they do, you make a lot of money. He looks at the world in 2 years down the road, and that's how he invests, not 10 years. He gets great ideas from younger people on his team. The older you get, the harder for you to understand the future. And they were talking about Warren Buffett at the time and how he's 90 years old, and how Ross just doesn't think that Buffett can foresee the future just because of his old age right now. He thinks the real value of Tesla is their gigafactory and the ability to produce batteries and cars. He thinks robotaxis are very complicated with a high learning curve, and he just doesn't see it very soon. He's not a fan of the pain of real estate. He believes real estate is the most painful investment of all time. He knows people who make money from it, but it's not for him. It sounds like he doesn't even own his own house because if there's a problem, he says he just calls his landlord to fix it. When he was 23, he started tracking 100% of his trades. What he noticed after a decade was that the more he traded, the less money he made. And finally, he thinks everyone can build wealth over time if they're willing to save money, even if they don't make a lot of money. One of his largest clients is a landscape architect, which is basically a gardener, and his net worth is north of $20 million, and he's still gardening. He started investing in his 20s, and now he's in his 70s. He invested as much as he could into stocks and real estate and just let it grow. Thank you so much for watching till the end of the video. I hope you found this video extremely valuable. I hope you took away some really great points from it. If you did like this video, please leave a comment down below and also hit the subscribe button so that you'll get notified when I put out a new video.